Hello, everyone. Welcome to Ask the Planman. Everything you wanted to know about finance, insurance, and more, but were afraid to ask. I'm your host, Bruce Weinstein, and I have a belief that everyone should have a plan, whether it's a financial plan, a retirement plan, a business plan, a fitness plan, even a travel plan. Each week, we bring you different topics to help you maximize your plans. On today's episode, we're going to be talking about the importance of having disability insurance. Probably one of the most underutilized areas of insurance is around disability. As everyone knows, we're our own printing press when it comes to making money. As long as you can go out and work, you can make your income. But what if you can't work? How do we pay our bills? Well, today we're joined by Zach Mindham. Am I saying that right? Mindham?
Mindham.
My apologies. Zach Mindham. He's the Disability Income Regional Vice President with the Principal. It's one of the biggest carriers we use. His territory covers the West Coast. He currently resides in the Bay Area, very nice, in Northern California. He works with many different distribution partners, including brokerage general agencies, independent advisors like myself, strategic alliances with firms like Edward Jones, and as well as Principal career agents. Zach has been working in Principal's disability insurance division for over a decade. In his free time, he likes spending time with his family, hiking, you're in a good place for that, and camping, live music, and like me, anything sports related. Welcome to Ask the Planman, Zach. Let me toss it out to you. Why is disability insurance so important?
Well, first of all, thanks, Bruce. Thanks for having me on the show. I'm really excited to have the time today. To me, I started my career working at Principal, and I actually worked in our disability claims area. So before actually, ever getting into sales or underwriting anything like that, I was actually working with policyholders and Principal policyholders who had talked to someone who had decided to make a plan. And let me tell you what, those people were forever grateful someone had that conversation. I think people overlook and kind of don't think about how important their paycheck and that income stream is. Well, like you said, we're our own printing press. So if you can't physically go out to the office, and more and more people today might be working from home, things like that. But if you're unable to perform your job or your occupation for some reason, I think more than ever, when you see that paycheck or that loss of income, when it goes away and you can't work or you're hospitalized or doing, maybe it's treatment several times a week and you just literally can't work. The financial hardship that we face, especially, as an individual, but if you, parent, you've got kids, family, spouse, the impact that has on everyone around you, it can just be devastating to someone who doesn't have a plan.
Sure. The thing that we address with clients is, in regards to life insurance, it's definitive. We're all going to die. And with that comes a lump sum of money, however big or small that life insurance might pay. But what people fail to understand is you have a 7 times greater chance of being disabled before the age of 65 than passing away. And the problem is, you're now a liability financially on the family. You might need a wheelchair. You might need to redo all the rampings in your home. You might have to get a different vehicle. And so it's a double whammy because you're not working to make the money anymore, and you've increased the family's expense exposure. Versus death, well, my wife can take the lump sum and she could put that money to work and replace my income or maybe, remarry. But in a disability, unless you're going to divorce that person and go find a new spouse, you're till death do us part, right? You're kind of on the hook. Would you agree?
Absolutely. And to be perfectly transparent, the number even beyond just, the likelihood of becoming disabled as opposed to a premature death. And back to kind of that financial impact, I know you said 7 times as likely. That's absolutely true. And I think there's really a process for any, I guess, death, disability, and the majority of the time someone gets sick and then they, would die or pass away. Obviously there are accidents, but there's kind of a process. And I think oftentimes disability gets sort of overlooked. People think, I got to get my life insurance. I got to protect my family. Well, what if you are, cancer, stroke, heart attack, and you are sick for 4 or 5 or 10 years, maybe you do eventually pass away, but that's a long 5, 10, 15 years or permanent disability if you have no income. A lot of people, I guess, think about Social Security or other sources of income. It's really not much. And to your point, when someone gets sick or hurt, income goes down, but those bills go up. So, like you said
Oh,
too, maybe you build a ramp, maybe you have to do other things as far as that disability goes, but you also have deductibles, you have prescriptions, you have, all those additional expenses in addition to just because someone's sick or hurt doesn't mean their kid doesn't want to go to college, doesn't mean they, doesn't want to play sports, but those are the things that are going to go to the wayside if you no longer have your income.
I want to break down for the listener. In my opinion, there's two sides of the fence. If you're in a corporate world, a lot of companies provide benefits, including their health insurance and their dental. And one of the things they have is what's called short-term and long-term disability. If you're self-employed, well, then you have to self-provide. There is no corporation. IBM's not giving you benefits when you open up, the Zach Mindham, insurance agency or Weinstein Wealth Management. So you have to provide this for yourself. So I want to start with what the corporate side protects. And so people out there, my listener that is working for a corporation is probably getting, in most cases, some form of a benefit. And then I want to break it down of what the difference of short-term versus long-term is. And as you just mentioned a moment ago, how it ties into the government benefits as well. So you want to break that down with us?
Absolutely. So many companies, especially bigger firms out there, will offer some sort of a disability insurance. Oftentimes it's a short-term plan, which usually benefits start in, could be even a day one if it has an accident component in there. Most sicknesses or illnesses benefits would begin after 7 days. And those short-term plans will pay anywhere from, could be 12 weeks, so about 3 months. Sometimes you'll see a 180 day, which is a little bit longer. Every once in a while, like a 1 year benefit, but typically 12 or 3 months or 6 months is that duration for your short term.
And that's labeled short term.
Short term
And
disability.
And as you mentioned, maybe takes 7 days. Again, just from experience, so people understand. A lot of times your company, depending on how big or small they are, may have you use your sick days and your vacation days first before the benefit kicks in. So when Zach's saying it could take 7 days or longer, that's because they may have a feature in there to use up. They're not letting you take your vacation days if they're paying you disability, right? And so, again, from my experience in our years of being in the industry is most big corporations will have 6 months. So the standard 6-month disability would be deemed short term, but some plans may only be, as Zach's sharing with us, 3 months. Go ahead.
Yep. So typically, once those short-term benefits run out, most companies are going to offer a long-term as well. A long-term disability plan is typically going to just start right when that short-term plan ends, and benefits are usually going to be payable to age 65 till Social Security normal retirement age. So it's going to be a more long-term claim. It doesn't necessarily mean you're permanently disabled, but a long-term claim is typically on average 2.5 years or more. Again, some are permanent. Some might be that someone's maybe had, a major surgery. They need to be out of work for a year and a half. So those can vary. But those are going to work together short-term first all the way into your long-term disability. One thing to note on those, and I don't know if maybe we'll get into this a little bit later, Bruce, but most long-term disability plans too, there's a period of time where they'll look at your own occupation. After typically 2 years on a group disability long-term plan, those plans change to an any occupation definition. Meaning, if I'm disabled from my own job, say I'm a doctor and I can't perform surgery, for those first 2 years, I qualify for benefit. After 2 years, that group long-term disability plan is not going to say, can I be a surgeon? Can I do my duties as a physician or dentist or whatever that might be? But more so, can you do any occupation? So that is kind of something to look at with your long-term plans, especially if you're in a more technical position, something like that. So always good to think about that too.
I had owner occ down as one of our subjects. I want to make sure we finish the earlier piece of this, and we can come back to the owner occ, because I do have a couple comments there. So the long-term disability usually is after the 6 months, and again, depending on the size of the company you're working for, they may or may not provide long-term disability. If they do, one of the common complaints people have, my clients may say, is, why am I paying for it? It's not a benefit if I'm paying for it. And so what I want to make sure people, and I'm sure you're going to affirm, is disability benefits. If you, as the purchaser, I buy my own, Zach buys his own, you listener buy your own, Well, that income is now tax-free because I bought the insurance. If you let your employer pay for and provide the insurance, it is now taxable, just like your paycheck was. And so that's one of the nuances we want to make sure people understand is why you pay for it, why you don't want payroll. You can do payroll deduction. You don't want it pre-tax. You don't want it to be something that is coming out that the company is providing. You want to pay the tax on it. You want to pay in after-tax dollars and show that Zach paid for it himself. True?
Yeah, absolutely true. And another thing to add, or another comment with that. So not only if your employer pays and you don't pay the premium, or you don't have that kind of bonus up, is sometimes what we'll call that. Not only are the benefits taxable, but most plans are typically going to cover like a short term or even a long term plan. Those are typically a percentage of someone's salary. 60% is common, probably the most common percent that we see. Sometimes you'll see a 67. Sometimes you might actually see less, like a 50% plan. So one thing to keep in mind on those taxable benefits, when someone goes on disability and their income basically goes down to 60%, you're already taking a hit, on what you're making today, on your gross pay. But then, so now you're going down to 60%, plus then you're paying taxes after that. So, a taxable long-term or a short-term plan, you are going to have significant less income with those plans. Still better than nothing. I'd be happy if my employer is going to give me something I don't have the option to bonus it up. I'll take it. But it's
better
good
than
to know
than no coverage.
Good to know what you have.
60%, 70% tax-free, in theory, comes much closer to what your normal take-home pay would be, because you got to pay your FICA tax, your Social Security tax, got to pay your state or federal tax. And so that's kind of how it's calculated. Now, there's also another point in here to make sure we throw out. When we talk about people's salaries, how many people do you and I know and encounter that have a bonus component or year-end incentive that is paid out based upon corporate productivity? Well, guess what? That's not covered. It's your base pay that's in the system is normally what those benefits are calculated. So if Zach got a $50,000 bonus last year above his base, his disability benefit is only going to be on the base. And so now you got to find out other avenues to potentially. Now, if you have a history of getting that bonus and you're an executive in the company, and that's where people like Zach and I come in and do private add-on policies to people's corporate policies and see what else we can get them. So the company's going to give you X, and then people like Zach and I will find you the complements, fill in as much of that gap as possible. So if you're only getting 60% and principal's willing to give you 75%, well, now we can put that 15% in place.
Exactly. Yep. And we do that all the time. I mean, and again, to the point of, having that employer paid, corporate paid plan is great, because that's where we can come in. And then, for that policyholder, they don't have to come in and buy a big, that full amount, because their employer's taking a big chunk of that on themselves. You can basically buy that supplemental for a lower cost. So that's a good deal too. Absolutely.
And as I always say, episode after episode, when we talk about insurance is only good as long as you're insurable. So once you start having health problems, and disability is one of those, but again, I want to paraphrase this a little bit differently, is the benefit of getting group benefits is there's not necessarily an insurability testing, because it's given to the whole company. And so people will take a corporate job who might be less insurable or uninsurable and know they can pick up some benefits there. But if you're uninsurable in mine and Zach's world, we're not going to be able to get coverage. So again, you got to do your homework and you got to do these things before it's too late. I had a call. One of our recent episodes was on long-term care, and I had a colleague call, and she wanted to know if I could help her get long-term care. But then she started to tell me about some of her medical challenges. And I'm like, those are probably disqualifying health issues now. It's too late. You're not going to be able to get it. You're going to have to go to Plan B. So again, just word of caution to everybody out there is it's only as good as your health is going to permit. And the sooner you do it and address it. But let's get into some of the features. So I want to tie it into the self-employed side. I think we pretty much cover everything on the corporate side? I think so. So where this really comes into play, and where most of our business has been done over the years, is with our clients that are self-employed. Accountants, attorneys, doctors, people who own their own business in some capacity, whether it's uh, lawn maintenance companies, roofers, home builders, whatever it is. If you're self-employed, you've got to fund these benefits. So we do group health plans. And with that, we offer the clients disability, life insurance, dental, vision, and other auxiliary options. And so if they're willing to offer it, provide it, again, educate the employees of who's paying for it, but it's all guaranteed issue. So it doesn't matter if you have sickly or diabetics or cancer survivors or whoever's out there, everybody can play. And that's again available to any small business or not necessarily individual, right? If you're an attorney and you have health history and it's not a group plan, you're going to be out of luck. It's not something you're necessarily going to be eligible for. So what can you help elaborate? I got a few more questions I'm going to prep for here. So,
I mean, as far as the medical goes and as far as the underwriting goes, I think you nailed it. I mean, you got to get it while you're healthy. It's before you have that, cancer, before you have, the heart condition, before this happens. So, I get calls all the time from a broker that said exactly to your point. I've got a client that's interested in disability insurance. Then they start getting into the history or send me the history. At that point, we can't insure the house if it's already on fire. We got to do that before the fire breaks out. And so just getting it, when you're younger and when you're healthy, most carriers in principle included, we have different options to what we call like a simplified underwriting or kind of like an accelerated underwriting. So maybe you do have some sort of health concern or maybe, maybe you just don't want to go through that full underwriting process. We'll offer solutions where we can get you smaller policies or smaller benefit. We might not be able to get you that, $20,000, $30,000 a month disability insurance policy, but maybe we get you that 5, 6, 7, maybe up to 10,000 a month. Typically, no labs, no exam, no financials. Still going to answer those medical questions. So if you have something major going on, again, still might be challenging to actually get approved for the coverage, but most carriers do have those kind of streamlined options. So if you're working with an agent or inquiring, always ask about, what kind of simplified or maybe accelerated options are out there. I always recommend that. The other thing I would say too is most carriers, including Principal, we're always open to preliminary inquiries. So if you're a client, if you're an agent out there thinking about, maybe this is something that I want to look into, if you have a medical concern, we can always go to our underwriting team and say, this is what's going on. What can we expect or what kind of an offer what might we be able to make? Another kind of nice thing just about Principal, about other carriers, we won't necessarily decline every application. Maybe someone is sick or maybe they're hurt. More and more today, we see things where someone might have one or two conditions. Some of those common ones might be they're going to the chiropractor, they've had problems with their back or spine. Maybe they're doing counseling or taking medications for things like anxiety or depression. Overall healthy, and we don't have much concern of them becoming permanently disabled. But if someone's currently treating for something, from a disability standpoint, we can exclude many conditions. So we might be able to still get someone a policy, even if they're currently treating for someone for a certain condition. We can exclude that from the policy, meaning we won't pay a claim, but we would still cover everything else in any new condition. So that would be what we call a modified offer. But good to keep in mind that, even if you have something going on, doesn't necessarily mean you wouldn't be eligible for coverage. So always check, because some coverage is better than none, especially when you might only have one or two things that, currently would be excluded. There's a lot of other things that would be covered.
So in terms for again, the listener, is we're talking about things that might be considered pre-existing conditions that you're dealing with. So in the health insurance world, there's limited options based upon where you can go for your health insurance. The marketplace is, the Obamacare, the ACA, everybody with pre-existing conditions are welcome there, and you're going to pay for that. If you're not requiring a pre-existing condition policy, you're going to save money going somewhere else. So what Zach is sharing in here is, just because you have a bad knee or a bad left knee doesn't mean the rest of your body needs to be vulnerable. So if your bad knee gets worse, well, that's not going to trigger. If ultimately your knee puts you out for disability and you can't work, they're going to say, hey, we knew about that. That was a pre-existing condition. You're not going to qualify for your benefit because we excluded it. But if your good knee goes bad, or your elbow goes bad, or your neck gets hurt, right, or you get an illness, well, yeah, the rest of your body's covered. So that's where he's describing here. So it's not a all or none. I am working on a case now with you guys, and the client has a multitude of issues, including bad knees, that came back as being excluded. And so now he has to decide, do I want it for everything else but my knees? And, take or not take the policy. So again, information is power. And that's what we want to empower people is just do your homework, be informed. Everything's about a plan. Is what's your plan of attack? What am I going to do here? So let's circle back. You mentioned owner occupation. And so let's tie that in for the self-employed as well, because you kind of mentioned the doctor type of thing. So the owner occ on the private pay side, the self-employeds might be a little bit stronger. A lot of them will give full coverage for owner occ protection, but they will pay for that. And then the any occ might cost a little bit less, but you can't ask a dentist to go be a brain surgeon. And so the question's going to be, and I didn't want to take the tangent in the middle of the other piece. So if any occ might mean in literal sense, well, you could be a greeter at Walmart and make $300 a week. Well, they want you to do that, and then they're going to drop your benefit by that $300 a week. You'll still get your benefit for the rest because you can't do what you used to do. But if you can do something else, they want to see you participate. And part of that is people will take advantage if they're not pushed to go back to work. There are people who abuse the system. I've seen it. And they're like, hey, I'm just going to keep collecting my checks, and there's no reason I should be forced to go back to work. Well, guess what? If you have an any occ, it's been 3 years, Zach. It's time to get off your behind. You can go deliver newspapers. You can go drive Uber. Like, what can you do? And so they want you to get out and be, participating in society again. Right?
Exactly. And so most of those group disability policies that we talked about, those corporate owned, those are typically going to be an own occ for 2 years. And after 2 years, the carrier is going to look at that policy or that claim and say, okay, again, yeah, we know you can't do your job, but there's a multitude of other occupations you could do. Go do it. And if they can prove that you can do something else, yeah, you likely would not qualify for disability benefits under the policy. Back to Social Security or social insurance, a lot of people that don't have disability, they might think, I'll rely on Social Security disability. As I'd mentioned earlier, benefits on Social Security are very, very low, just to start. But that definition is very stringent. So just like you had mentioned that any occupation, if Social Security can show or prove that you can do any occupation in the economy, again, not going to receive benefits. So it's very, very difficult to get approved for those benefits.
It's got to be it's got to be a pretty severe permanent disability for the government to really allow it to happen. And it does go through, but it's declined way more than it is ever approved. And again, there's a longer waiting period and there's an application process. And as Zach said, if you could be, sweeping the street, well, then go sweep the street. Like they're not, but if you're poorly off, you're entitled to it. Somebody's born, deformed or, have crisis or issues, then of course that kind of stuff is going to exist and pay. But, people have accidents and all of a sudden they're just not functioning anymore.
Yeah. So let's talk about what we're, a private policy or a business policy, a business owner or like a principal policy that someone would actually go out and purchase in the market from a broker agent. Those policies are going to be own occupation for the entire duration of your claim. If I'm a dentist or if I'm a doctor or if I'm an attorney, I probably don't want to go necessarily work at Walmart at the front and be the greeter, right? I've gone to school for 20 years and I'm trained and I'm educated in this field. Even if I could go back and do something else, doesn't mean I necessarily want to. So with a policy like principal or an own occupation definition, some will call that a true own occupation, or specialty definition. It doesn't matter. There's, you could be able to perform hundreds or thousands of other jobs, and the insurance carrier can say, you can do this, you can do that. If I don't want to, I can kick back and watch Netflix and do it. I don't have to go back, and I'm going to get paid by the policy no matter what. If I can't do my own occupation, I get paid. So that's the strongest and the best definition, and that's what you really want, especially in those more technical occupations, especially in the medical field, especially business owners. If I can't do my own job and work in my business, I probably don't, again, want to go back and do something else. I either want to focus on getting back to work in my own business. And if not, I probably can't work at all. So again, that definition is very important.
There is some differentiation, let's say, because I have down here, like I remember the classification of the worker themselves, and not to be disparaging, but white collar versus blue collar, to label it, is the law professional, the doctor, it might be in the white collar sense versus the truck driver, the cab driver, the Uber driver, and so it is evaluated differently because of the risk of being disabled as part of it. Like, what's the
Yep.
likelihood of a truck driver getting hurt or having an accident that creates this disability versus a dentist working in his office? So some of it is the hazard of their work environment, but it's also the owner occupation now isn't going to be as luxurious for more blue collar type work, and the benefits are going to vary. And so it is what it is. But I want them to understand that it's going to be looked at and offered on different levels and different participations and different dollar amounts. So, a 2A versus a 5A is just some of the differences. And I've had white collar people come in at 2 and 3, like they find that their jobs are more hazardous, or the doctor just had some issue where, and so those classifications, 1 through 5, a lot of it, the higher you are, the more we're willing to offer you, and
And
you'll
at a
pay
lower
for it. It's
yeah.
right.
So the
Go ahead.
overall rate, if I'm behind a desk, I'm going to pay less than someone who's out there doing construction and doing the physical work. Doesn't mean we can't get either one a policy, but if I'm doing a heavier duty job, I'm going to have to pay more than someone in an office or at a desk. One thing to note too on that, Bruce, most group disability policies, another kind of big difference. Most group disability policies, if you get sick or if you get hurt due to your employment, they would decline the claim for long-term disability. Most are going to be not approved because it happened as a result of work.
That's workman's comp. If you got hurt on the job, if you're working in a warehouse and the forklift ran you over, that's workers' comp. That's a whole
Yeah,
different
exactly.
conversation. Go ahead. So I just
When
want to
you
label
look
it. Go ahead.
when you look at individual policies, though, like a principal policy or another individual, personally owned policy, you would receive that on top of any workman's comp benefits. So, if you are in construction, if you're in a heavier duty job and you take out a private policy and you get hurt at work, now you're going to get your workers' comp benefits, plus you're going to get your personal policy too. So that is good, to keep in mind, is that it's a true supplement. Individual or personal plans, they would supplement any group. You have your coverage through your work, so any group policy, any social security benefits, any workers' compensation. Personal individual disability layers and stacks on top of really everything. It's a true supplement. Whereas a lot of those other policies offset by each other and can reduce by certain, so it's good to keep that in mind too. That's really the best supplement you can buy out there.
Another point I want to hit home on for the self-employed is the two topics is key man or buy sell, right? Key man stuff. But let's hit business continuation first, because again, as you said something, it registered in my mind. Like, so business continuation, if I own a construction company, I have workers out there. And so as Zach just described, the worker might get hurt at work, and that might be workers' comp or something else. But if I'm the owner and I'm behind the desk, I'm a different classification. And now if I'm not working, I've got to make payroll. I've got to get jobs and contracts. And so business continuation on a disability is a separate level of coverage, so that the rent is still due in my dentist's office, right? He's got to pay his staff. He can't just put them all on hiatus because he can't work.
Right.
And so it's not just his income in that sense from a self-employed, it's the people within the company that he's responsible for paying. So that's also a piece people want to make sure they have. Can you elaborate more on business continuation?
Absolutely. And I think is a very important policy for any business owner to own. A lot of those employees might be close friends, might be family. So if you can't pay payroll, not only now are you sick or you're hurt, you're unable to, and now you can't pay, now you can't pay your employees. So that's that's a terrible spot to be in. Most carriers, Principal and others out there will offer, it's called a business overhead expense or a business continuation. Typically, someone's going to have a personal or an individual policy that's paying themselves, pays your personal mortgage, groceries, everything that, every normal monthly expenses. But you might have 20, 30, 40, $50,000 a month in not only payroll, but as Bruce said, maybe mortgage or rent on that business. Maybe you rent
Landlord's not going
equipment.
to want to hear.
Exactly, everything out there. So Principal and other carriers will offer um, Principal, we offer up to $50,000 a month of business overhead expense coverage. Now, differently than a long-term disability policies, these aren't a long-term solution. These policies they're taken out with the idea that I'm going to hopefully, or I should be able to return to work at some point. So these policies don't last till they're 65 or 67 or 70 years old. Typically, these will pay benefits for 12 months, 18 months, 24, maybe 30 months. But being able to keep that business going while you're recovering, while you're doing whatever treatment that you need to do to get back. Eventually, and Bruce had already alluded to that, if you're not coming back to work, if you're permanently disabled, that's when it's important that hopefully you have some sort of a buy-sell agreement in place as well. So it's kind of that individual paying yourself, your business overhead expense, or that business continuation, and then disability buyout. I don't know if you want to talk about disability buyout a little bit or not too, Bruce, or
We can share a little bit on the business continuation, the business overhead is, think of it in a sense as a stopgap so that whoever's involved in the business, if there's more than one partner or it's just the partner, then that person's family, is at least there's a way to get some revenue coming in to keep the lights on and the business functioning. And maybe it's severe and Bruce is never coming back to work. So Robin's got to figure out how to sell the business and she needs a little bit of time. So the revenue and the lights can stay on, the staff can keep working, sales aren't going to plummet. I mean, who knows, whatever it's correlated, but we need some time to execute a sale of a business. And then as you're talking about the buy sell keep person type of programs, it's just a way for partners to be able to handle losing one of those partners. If you and I are lawyers and we're each bringing in half of the revenue, we're 50-50 partners, and now I suffer that disability, well, your overhead, your expenses, all that, everything tied to it all of a sudden gets whacked because you just lost half the firm's revenue. And so the key man allows that revenue to come in, pays the employee who's hurt, the partner, and provides the business continuation to help fill in that gap to the business. So go ahead.
Yeah, absolutely. So, if Bruce and I, again, we both own a business together, I think it's important to think about how long. It's important to have that plan in place for how long does Bruce want to continue to pay me? If I've been at home, not working, not contributing, really, obviously sick, so going through a challenging time there, but unable to contribute to the business, how long does Bruce want to continue to pay me? And I think that's the point there too, is if you have that key man policy. So it might not have to be a business owner. It might be just, you've got a key salesperson. They're bringing in, 50, 60, $70,000 a month or a week in sales. If they were to get sick or hurt, that's revenue. I mean, that could be serious revenue for the business to lose. So again, we have policies out there. If that key person gets sick or hurt, we could pay that business that 500,000, that 750,000 $1 million lump sum to help kind of bridge that gap until that key employee returns to work. And then in addition to a key person policy, we have those disability buyouts. So Bruce and I are both owners. Again, I haven't been working now for 2 years. At that point, that would be a trigger to say, okay, it's going to pay a 1.5, a 2 million, a $3 million benefit to Bruce. Bruce can turn around then and use those dollars to buy me out of the business. He doesn't have to come up with $2 or $3 million. He got it from his insurance policy. Bruce now owns 100% of the business. I have been bought out, and again can use those dollars to continue to save or help with medical expenses, things like that. But again, especially for those small to medium sized businesses, maybe it's just a younger business, only been in practice for 2 or 3 years. They might not have the liquidity to be able to pull together $2 or $3 million if one of those owners becomes disabled.
Well, again, in the world of insurance, the life insurance is more pronounced and used. And so if I die, there's the life insurance to then be able to buy out my shares and my family. And so as Zach's describing here, is it also exists in disability because I didn't die. And now I gotta get rid of this guy. I gotta find a new partner. I gotta bring in somebody else. I gotta be able to get the shares and the ownership away from that person. So it does provide that liquidity. So it's important to know. And that's why we invited Zach here today. I had another thought, and of course I forgot it as I was doing that. Anything else you can think of? It'll come back to me in a minute. I'm looking at
Well,
my notes.
while we're on the topic,
I remember.
oh, go ahead.
Yeah.
I was
No,
just
go
going to
ahead.
say,
Yeah.
while we're on the topic of the business solutions, Principal and other carriers too, there's a lot of services that are available to, the consumer out there. So like Principal, for example, say you're a business owner. We've got a full team in our Principal home office that'll do an informal business valuation. Maybe you haven't done a business valuation for 5 years, 10 years, or ever. It's important for business owners to know what that business is worth. When they're coming up with a buy sell insurance plan for those two partners, how do you come up with an actual amount that you need to purchase? Again, so kind of looking at those other options besides just the insurance, but a lot of these carriers will do extra services for the client. So again, informal business valuations. Maybe you're a business owner and you have a buy sell agreement that you made 5 years ago, 10 years ago. We can actually then go in and review that to make sure there's no gaps in the coverage or that things haven't changed. So again, not only the insurance, but working with your, insurance carriers, with your advisors to know what else is out there beyond just the insurance and what they can do. Most of which for no cost. All those services that my company Principal offers, no cost, complimentary service. Even if you don't end up buying a policy, we can still do that at no cost.
Excellent. So the two last points here is one of the challenges that the business owner has is income verification and getting their income built up to now start to qualify. So what's the rule of thumb there? I kind of have in my head, it takes about 3 years of proof of income, kind of like getting a mortgage, is they want to see, self-employeds are put under the scrutiny for a multitude of reasons. But if you want your income protected, then you can't take 1,000% write-offs and show no income. So you can't have it both ways. So you need to show some income. You need to show some viable income and some easy for me to say, some sustainable income for Zach and Principal to be able to assess and evaluate and then make you an offer. So is it around a 3-year window? What's the basic rule of thumb?
And I think some carriers are still looking at 3. My carrier would typically look at 2 years of income, and if it's been sustainable or fairly consistent, we could typically use that. There are some industries which can be a little bit more volatile. Real estate is one. There's some others out there where it can fluctuate quite a bit. So we will want to see more like a 3 years of income verification. And typically that's just your, the tax return. So if you're a business owner out there, 1 or 2 years business returns. Most carriers too, especially for individuals just starting in practice, just opening a business, might be able to give you a small policy even with little to no income. Maybe you just started your business. We have like a first 2 years in practice where we can give you X amount of benefit without having, the full financials or what you think or what you projected that you might earn in the next 2 years. But again, giving you something to kind of get you started. Same with other professions like, an attorney or a CPA, an accountant, an engineer. We've got certain limits that will say, okay, we know that you're just starting this business. You don't have the financials. You just simply don't yet. We're willing to give you this much because we know on average, an attorney is going to make this much. So there are still solutions out there. Can we get you 20,000 a month? No, but typically, yes, 2 to 3 years is pretty consistent there.
So it's a great piece of information. Something I was unaware of is we'll call it a starter kit, right? You can get a disability starter kit, but it does tie into my last question here, which is future purchase options. And so tied to what Zach is saying about getting a starter kit going is, historically you might be making 20,000 a month, but you're not showing that now. We'll give you 2,000 of coverage. And what we're going to do here is we're going to give you a future purchase option, which regardless of insurability is guaranteed as long as you show and can provide your income going up, and there's stops along the way every 2 or 3 years. But now all of a sudden you just had a sustainable $100,000 a year growth in your business and your income. Now you can provide that documentation. Guess what? Zach's going to bump up your coverage to reflect that new $100,000 of income. And then every so many years, you can keep going back to the well. And so somebody new in business at 25, all of a sudden at 50, has way more coverage that is fit into their needs and lifestyle versus day one. And if their health has changed along the way, they don't have to prove insurability. And I think that is a big, so what for the audience to get out of this is there's a reason why you want to start younger and healthier. It may not be the most advantageous to your budget, but it locks you in. It gets you future purchase options. It protects your insurability. Wouldn't you like to have life insurance offered to you as your health is changing and diminishing and you could just add as much life insurance as you want? It doesn't happen. Disability, it can, and it's built into your programs. So,
yeah. And typically those increase options are no cost. We include those at no cost. But we won't include them if someone's sick or if they're, we can still, again, kind of like those exclusions we talked about earlier. We can still get you a policy, but again, if you're sick or hurt, we can get you a policy, but we might not be able to get those future increase or those future purchase options on there. When you get those when you're younger, healthier, we can include them. And like you said, Bruce, have a change in health, it doesn't matter anymore. We can increase you with just financial underwriting from there on. So yeah, those are huge. And typically there's no limit on those. So someone can buy that policy that takes them at, starting at $1,000 or $2,000 a month. Income goes up, we could get you up to, $15,000, $20,000 a month with not one additional medical question. So pretty significant growth there too.
It's powerful. And just to circle back to your comment there is, if somebody's having medical challenges and can't get the future purchase option, they can still apply for more coverage later as their income is there, but they're going to be subject to underwriting. So if they're going to be deemed to be okay, you could still get it, but there's a big difference with the guarantee with the future purchase option. So, Zach, I think we hit all my bullet points today. Is there anything else in closing we can leave the audience with? Did anything we miss?
No, I really appreciate you having me on. I guess I would just think too, budget's always a factor, especially any insurance out there. If you don't want to spend a whole lot on disability insurance, you don't have to. I think a lot of people think this has to be, this is going to be really expensive. This is something I just can't afford. Talk to your insurance agent, talk to somebody, get a quote. Most, even if you can't insure your whole income, even 60 or 70%, if you can get a policy that's going to at least cover your mortgage and groceries, again, in the event of that disability, you're going to be very grateful and very happy to have that coverage in hand. Because again, income goes a long way, and when you don't have it anymore, you don't really realize how important that really is. So, but really appreciate the time, Bruce. Appreciate you having me on.
My pleasure. Look, this is why the show, the Ask the Planman, is it's about having a plan, as Zach has helped us emphasize today, that where does disability planning fit into your needs, protecting your income? You're the golden goose. You want to make sure that you're always capable of paying the mortgage, the rent, the car payments, the kids' college, all these expenses. As we said earlier, you pass away. Most people have life insurance. Clearly, a lot of people don't have enough life insurance, but it's a one-time. The money's going to get paid out. Your family's going to move on. They'll heal and they'll mend. You're disabled. You're sitting there as an appendage on your spouse or partner's couch, and they got to deal with you. They got to pay for you, and now you're not carrying your own financial weight, bring it into the household. And so this is why we're here to address that for you. So I'd like to thank my guest, Zach. I appreciate having you here today. This was, I think, extremely informative. Zach and I need your help. We'd like you to please like, share, subscribe our podcast, asktheplanman.com. The YouTube page is Ask the Planman. I'd love to hear from you at Bruce at Ask the Planman. Call the toll-free number, 844-PLANMAN, and give us questions you might have to see. We're trying to cover a lot of different topics. We're here every week. Thank you. Remember, when you need some advice, always get it right. Come ask the Planman. Again, Zach Mindham with Principal. Thank you so much for being with us today.
Thank you. Appreciate it.
Absolutely. My pleasure. Zach's contact info will also be in the show notes, so you can reach out to him there. Not sure if he deals with people individually versus agents like myself, but I'm sure he'll be available to anybody that wants to reach him. So I failed to mention that. So Zach's info will be in the show notes as well as ours. But again, come ask the Planman. We'll see you next time. Everybody have a great day. Thanks again, Zach.
Thank you.